Hi, everyone. After a week's break, I am back with our weekly roundup. And this week, I'm only covering three stories. I'm going to go into a little bit more depth. I'm covering the story on KCB's first ever fintech acquisition, with a caveat, of course, if it is approved by the Central Bank of Kenya. And here I am talking about KCB's acquisition of Riverbank Solutions, which is one of the major providers of agency banking and other fintech solutions in Kenya and the region. Then I'm going to cover Lipa later moving into administration or bankruptcy, if you want to call it that. Last but not least, I want to touch on GSMA's report on mobile money's impact on 5 African economies. But today I only cover Kenya. And these economies are Cote d'Ivoire, Senegal, Uganda, Kenya, and Tanzania. Sorry, Ghana instead of Uganda. So let's go into looking at KCB's acquisition or announcement of acquisition of 75% of Riverbank Solutions shareholding. So what's Riverbank? Who's Riverbank? Riverbank was founded by Nick Mwendwa a couple of years ago, and the focus was initially on agency banking, but they've moved into other payment solutions and more importantly, the digitization of revenue collection in a number of county governments in Kenya. So you want to ask yourself, why? What is the genesis or the reason why KCB Bank Group, one of the leading banks in the region, what is the reason for their acquisition? First, obviously, Riverbank has powered KCB's agency banking platform for several years. I think it goes beyond that. It gives KCB an interesting look or perspective or the beginnings of potentially banking as a service platform that would cover several industries. They'll cover private sector, they'll cover government. Riverbank has an interesting entry or space when it comes to agency banking, when it comes to county government revenue collection. So this is a super interesting acquisition where I am sitting. And I believe well executed. I believe with the financial muscle that KCB could put into this organization, this company, that it would take them places. Bit of caution though. I am really, really hoping that KCB will not decide to integrate this into their operations, that Riverbank will be allowed to operate as independently as possible with the financial muscle and resources that KCB can put to bear into this organization. It will be very, very interesting. The way agency banking is structured in Kenya right now and possibly in the Eastern Africa region, you have a couple of banks that have the majority of agency networks in Kenya. And when I say banks, I say tongue in cheek, that also includes M-Pesa. Yeah, so, I'm joking but not joking because by all intents and purposes, M-Pesa is a financial services brand and it has the largest agent network, not just in Kenya, but in the region and probably across the continent. So what does this mean? First, the mopping up and the mobilization of deposits through agency banking has become phenomenal. I am talking about billions of dollars being deposited through agency banking in Kenya alone. We are talking about a substantial amount of money. coming into banks through agency banking. There are probably about 4 or 5 banks in Kenya that has the majority of the agency network. KCB, Equity Bank, Coop Bank, National Bank, uh, possibly NBK, NCBA, possibly. But these other 4 banks have the bulk of agency banking. The rest of the banks are sort of trying to start playing in this space. The best investment that KCB can do is to leave Riverbank as a standalone opportunity for other banks to seamlessly plug into the agency banking ecosystem that they've already built. That would create a super interesting platform for other banks. See, agency banking in Kenya is extremely fragmented. Allow me to say this. If you look at not Nigeria, if you look at our neighbors in Uganda, the Ugandan Banking Association came together with a fintech called Eclectics and created the Uganda Agency Banking Company that represents all banks. So you're talking about a platform that's one platform. You don't have a situation in Uganda that you have in Kenya where you have an agent with like 4, 6 different PDQs serving different brands. One PDQ serving Coop Bank, another one serving KCB, another one serving Equity, another one serving. Although some of them are already interrelated and integrated, it becomes quite untidy. In Uganda, that's very, very different. And I would love to see a situation where that's happening. PesaLink possibly had the best opportunity to actually get this done. And possibly they still have that opportunity to actually get that done. So this is a very interesting development in the Kenyan banking and fintech ecosystem. Let's keep a close eye on how this development pans out, whether it will get regulatory approval first, and how KCB executes it going forward. Now we look at Lipa later and the administration or the bankruptcy filing of this pioneer buy now, pay later Kenyan company. What happened? After raising a serious amount of money by all intents and purposes, how did Lipa later start struggling? Could it be competitive pressure? Could it be the fact that dominant players like M-Pesa, who by all intents and purposes provide the platform for buy now, pay later solutions and other platforms, could it be the fact that they are getting into this lending space could have affected Lipa later? Could it be the dominance or the larger than life positioning of M-Kopa? What could have been wrong? Could it be regulatory challenges, compliance costs, and all that kind of thing? Over expansion? Did they scale too quickly, too fast? In Africa, when an organization goes into administration, the fact of the matter is that that's usually a death knell. In the US, you could talk about potential for restructuring. But in this case, especially in Kenya, when a company goes into bankruptcy or administration, it's about divvying up assets. Are there any assets left anyway with Lipa later? What's the big picture? First, let's look at Africa's buy now, pay later growth. Despite Lipa later's struggles, the market is expected to grow by 14.8% annually compounded by 2030. Will players like Payflex in South Africa and CredPal in Nigeria survive? They're leading the way currently. Will they survive? Would they move into the gaps that Lipa later has created? Globally, we are finding industry players, industry leaders like Klarna, they have faced profitability struggles due to rising interest rates and other industry challenges. Anyway, the key takeaway to this is simply that Lipaleta's downfall highlights the need for super strategic partnerships, the need for making sure that your P2P conversation, and I don't mean peer to peer, I mean path to profitability, becomes a clear strategic perspective for leadership. Last but not least, here's a question. Will BNPL players across Africa survive? I want to now discuss the latest GSMA report on mobile money contribution to economies of Africa. But let me focus on Kenya. This report, which, by the way, you can download from my LinkedIn post, you can just go through my threads of the last 2 days or so, and you'll find all these reports. Explosive growth. Registered mobile money accounts tripled from 25 million in 2013, when mobile money was just being getting into the mainstream, to 77 million in 2023. This is reaching 150% penetration thanks to M-Pesa and 320,000 agents. So we're talking about 150 penetration. So basically, we are saying that out of the people who have mobile money in Kenya, each one of us has 1.5% on average, or 2 M-Pesa accounts. So probably one is Pochi la Biashara and the other one is your normal personal M-Pesa usage. What's the economic impact? Mobile money has contributed 24 billion to GDP in 2023. That's 8.6% of Kenya's GDP. That's more than double 2013. This is profound. And if you think about your day-to-day operations, both business and personal in Kenya today, when M-Pesa goes down, what happens? There's a bit of a panic. That speaks to the dominance of the service, but it also speaks to a potential systemic risk in financial services in Kenya. M-Pesa has contributed to financial inclusion, rising from just 26.7% in 2006, just before M-Pesa's launch, to 83% to date. I mean, that is something else. It has boosted GDP by $460 in 2023, threefold increase from 2013. Those are statistics you can take home about. Those are conversations that you can't run away from. The impact of mobile money in Kenya. Beyond payments, it has enabled microloans, government services, and business transactions. In a nutshell, mobile money has become the lifeblood of Kenya's digital economy. Ladies and gentlemen, with that, I want to close this week's conversation. Looking forward to more next week. Asanteni sana.